Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So you can see our suggestion that market could show some minor pullback more or less is correct, and you can see that recently was minor retracement here. This market retested the previous top actually and currently accurately stands above it. So in general, overall context remains bullish. Currently market doesn't show any significant pullback, something strong to the downside, and stands tight euro above the previous top, which is good background for possible upward continuation. So in general, by taking a look at the ABCD shape here, the speed of the CD leg, we have the acceleration definitely here on this stage, which brings some chances that indeed market later could keep going to the XOP target, which is above the 1250 area. So recently, I don't know guys whether you have read the statement from Jerome Powell, but he said that in March it's definitely will be 25 basis points rate hike, but he also hasn't excluded chances for more aggressive action, which market has treated as the hawkish statement, because he said that if necessary, Fed is ready to act aggressively and even rising rates for 0.5% if it will be necessary. In result, you can see on the interest rates, which is actually shows the upward reversal here, which is a bit headwind for the gold at the short term. We will see what will happen on the non-farm payrolls release, but currently that's actually also was a background for retracement that we've got on gold. And in general, it might happen. I'm not sure yet because this process is just has started, but I have some suspicions that inflationary pressure could ease a bit with the nearest few months. It's mostly because of the flowing capitals out of the Europe. So currently, United States is very attractive safe haven for many companies. It's just because it's becoming very expensive to make the business in Europe. Energy is very expensive. So the military action also stands very close. So they understand what's the problem actually, and that makes some investors to move capitals out of the Europe, from the continental Europe. So it might be Great Britain, of course, and as usual, United States. This inflow and increasing of some demand for safe haven assets, which is bonds, of course, and other things, moving into the United States dollar, it could support the economy, and of course it could make pressure some on interest rates, which could let Fed to act a bit more free. So well, we will see what will happen within the few weeks, but currently it seems that some process has started in this direction. And maybe from that standpoint, it will be not necessary for aggressive action from the Fed in the nearest few months. But again, we need to take a look at the statistics first, what we will get. So on the other time frames, here as we see the bullish performance on the 4-hour time frame chart, market in general stands in the same channel. Here it might be the bullish sign that you can see price hasn't quite reached the bottom of the flag, and it might be the first point for possible upper breakout. So in general, the level where market stands right now seems important, and it should not be broken if market really intends to keep going higher. So although here on the daily chart we have another confidence around 1880 area, but this is, guys, a bit different scale. So if we will start to speak about this level, we need to consider this ABCD pattern with a deeper retracement. And in this case, we could say that probably the setup that we have on the daily and standing above the 1960, this short-term bullish stop will be destroyed. So we will have to take a look at the larger scale in this case. And this short-term setup will be valid until market stands above this area actually. So you can see that with this ABCD pattern hits the OP, the pullback that we have discussed recently has happened. Market actually has completed minor XOP here, creating an agreement with the 1930 area. We thought that will be a bit higher. I mean, market could stop a bit higher. So, but this you can see it just was the slight downside piercing with this spike. So because most action stands again around the area that we have specified, this 1920. So, and here's on our charts minor grabber has been formed, but currently it's difficult to say whether this will become the starting point of the upward action. So in general, if you have taken positions somewhere in this area, you probably could keep them and see what will happen. If somehow market will break it down, then just do nothing, wait for a deeper pullback. Because in this case, we will have to take a look, as I said, on this larger ABCD pattern, which potentially should lead market to the 1870. And that will be the next area where potentially maybe some bullish sign starts to appear. In this case, this short-term context with this minor ABCD potential upward butterfly pattern here, it will be erased in this case.